Because we just want to bring everybody Starbucks earnings, just crossing some breaking news here. Third quarter EPS, excluding items, 24 cents a share. Analysts were looking for 19 cents a share. So it looks like on the bottom line, they're beating by a nickel a share. Looking for a sales number. First of all, their comp sales are down 5%. We know that they've been certainly struggling in this economic environment. So they're talking about their quarterly comp sales down 5%. They're also talking about the fourth quarter, and they're expecting 74 to 75 cents a share on an adjusted basis. Excuse me. So that's some of the numbers we're hearing from Starbucks.
And that's actually a lot higher than the estimate, because the street was only looking for 21 cents in the fourth quarter as far as adjusted EPS.
So that's higher.
74 to 75 cents would really blow that away. We were looking for, by the way, $2.37 billion in revenue, and a big concern obviously has been, you know, what we were just talking about, the fact that revenue hasn't really been meeting, or at least beating, the way that the bottom line has. Let's bring in Courtney Donahoe now to break down the numbers on Starbucks. Court?
Well, CEO Howard Schultz, I mean, he's been fighting a lot of the perceptions out there that their coffee is expensive. They've gotten a lot of competition from McDonald's, also from Dunkin' Donuts. So want to reiterate the numbers again. Earnings per share coming in at 24 cents a share. Analysts were expecting 19 cents a share. Revenues coming in at $2.4 billion. Analysts were expecting $2.37 billion. Now, I want to give you what Howard Schultz has been saying, the CEO's statement. The transformation of Starbucks business, including the success of our consumer-facing initiatives, and they've had a lot of them this year. They've had their breakfast value meals coming in, pairing coffee with different sandwiches, oatmeal and coffee cake, a lot of different nutritious ingredients they've been trying to add to their stuff. But also, he was saying that permanent changes to their cost structure is delivering improvements in comparable store sales trends and beginning to be reflected in their performance. Now, comparable store sales decline of 5%. That's a sequential improvement from what we saw last quarter, and that was a decline of 8%. I'm going to keep looking at these numbers for you, Carol and Matt. Sending it back to you, Carol.
All right, Court, thanks so much. Let's get back to Alan Gayle. So, Alan, we've been, working our way through earnings here. You got those numbers on Starbucks. You talked a little bit earlier about the consumer. Any initial thoughts when you hear these numbers and some of the background in terms of the earnings report from Starbucks?
Well, I think it goes back to some of the things that we've been talking about, which is that companies over the fourth quarter and the first quarter and into the second quarter have been taking very aggressive steps to get their costs under control. We know that because of all the layoffs that have been going on. But at the end of the day, I don't think you can save your way into a higher stock price. And so as we look at companies, we're going to be looking for those signs that they are able to execute well in their business model and start turning around that top line growth. So that's why the guidance going forward, that notion of being able to turn around a positive top line sales growth is so important.
Hey, Alan, I wanted to just quickly ask you, we only have about 10 seconds left, what do you make of the trend? It looks like all of the bottom line growth is coming from the top line. Is that discouraging at all?
Well, I think it does show that businesses are being very, very aggressive, and that's really the first step in this turnaround. You've got to get your costs under control. But again, there is very good reason to be cautious in here, in that companies still need to start generating that top line.
All right, Alan, thank you so much. Alan Gayle at RidgeWorth Investments, breaking down the markets and also the Starbucks earnings right there.